Hello guys, welcome back again to my YouTube channel. Here again I'm making another video giving you the latest strategy to kill the derivative market. Okay, for this strategy, before we go into that, right, I would like to talk about a few things. Well, I appreciate you guys so much for your love, for the comments, for the feedback. Well, I appreciate. For those of you who have been doing that, may God continue to bless you, and give you a better understanding of this particular market. Okay, so I want to also address some things too. For those of you that are new, seek first knowledge. Okay, when you seek knowledge, then you can earn from it. If you don't seek knowledge, you have to pay. If you don't seek knowledge to earn, you have to pay. You understand? You have to pay by losing money. So in order for you to stop losing money, apply for mentorship, okay, so that we can take you through this thing the appropriate way at a cheaper fee. Okay, we don't charge much for mentorship. Actually, I intend to do a group mentorship for this October, so a lot of you guys can actually participate and pay at a very cheap amount, since it's going to be a group mentorship. Okay, so that you can learn together. There'll be discussion platform, a Zoom meeting, and all of that, so that I get to show you how this thing is done the right way. Okay, so and you, if you're scared too to lose money, and even though you have been in this game for the past 3 years, 4 years, and you're still scared of losing money, I assure you, if you still apply for my mentorship program, by the time I take you through the trading psychology and teach you how to think like a professional trader, I think you won't have any problem thinking having that fear in mind of losing money, because once the mindset is achieved, in just a single month you have recovered all your losses. So that's how this game works. Seek first knowledge. So I've been talking about the trading system. Okay, this system is still available. Okay, right now what I'm doing is I've discovered that the price is actually high. A lot of people cannot afford it. So it was 150 before. So because I want to help a lot of people, and people were saying the price is too high, if you want to help your followers and all of that, it's not because of that I'm reducing the price. People have been coming to me and actually trying to negotiate. So I'm coming here public now to tell you now that the price for that system is $50. So with $50, you can just purchase your system, plug and play. All right, plug and play. The system gives you draws the support level for you, draws the resistance level for you. It tells you when to buy and when to sell. Okay, so you don't have to do anything on your stress yourself too much. So it's something you just have to plug and play. So these are still the results from the system. I've played it previously in the previous video, so I can still just play one here so that you see. Okay, it's going to be random. It's going to be something at random. It's going to be something at random. So you can see that flip. That's a flip from 500 to 2000 something. That this was a long one. So some people will be thinking it's a demo. It's an old trade back then. So let's see another one. Okay, let's see this one. Still the same thing, I think. Still the same thing. Let me see this. What about this one? Okay. Oh, still the same thing. Let me just see again. Let me see. Okay. So these are the results from the system. So if you are interested, you can actually process copy. So let me see. I just want to see the one with a smaller amount. I've not been lucky today to actually get the one with a smaller amount. Okay, so you can see that the deposit does not actually matter. Okay, you can actually be losing, but applying the system the right way, with just one win, you have recovered your losses. Okay, with just one win, you have recovered your losses. So that is that for that. So let's get back to the main stuff of today. So for today's strategy, we are actually looking at, it's not the 1 minute time frame. It's actually something different. Okay, it works for every derivative pairs, the boom and crash, the volatility 100, 75, the jump indices, the step indices. This strategy works. Okay, even the almighty VIX 25. So now I'm going to open this chart, VIX 100, Wix 100, Wix 100, Wix 100, okay, Wix 100 chart. So for this strategy, I call it the Tay analysis framework. Tay analysis framework, okay, the Tay framework. So how does this strategy work? Or what is the Tay framework? What does it stand for? The Tay framework. Okay, the Tay framework, the Tay framework. Please, you can use a pen and a paper, okay? So for this strategy, it's called the Tay framework analysis. Okay, Tay framework analysis. All right, analysis. So you can use a pen, write it down, okay? Because as I'm done, I will wipe it out, okay, so that I can write new stuff. The Tay framework analysis. That's the name of for this strategy we're going to be looking at today. So the Tay, where T stands for trend. Okay, write it down, please. T stands for what? The trend. All right, T stands for the trend. Okay, and the A stands for the area of value. Area of value. Okay, the A stands. T stands for the trend. A stands for the area of value, and the E stands for entry. E stands for entry trigger. Okay, entry trigger. So the A stands for, the T stands for what? The trend, and then the A stands for area of what? Area of value, and then the E stands for the entry trigger, the Tay framework. Let me go through it again. Tay framework, Tay, T-A-E, Tay framework analysis, where the T stands for trend, and then the T for trend, and then area of value. This A stands for the area of value, and then E stands for the entry trigger. So that is that for this particular strategy. Before we go into that, I would like to delete those ones. We'll come back to those ones later. Okay. So how do we apply the Tay framework analysis? So the Tay framework analysis. First of all, you look at the Tay. T stands for trend. You are trying to identify the trend. What is the trend of this market? It's in an uptrend. Why is it in an uptrend? Because price is above the 100 exponential moving average. If price is above the 100 exponential moving average, we have an uptrend. Okay, 100 exponential moving average, you have an uptrend. In the same manner, if price is below the 100 exponential moving average, like this one I'm going to be showing to you, it means we are in a what? Downtrend. Okay, if you can see the daily chart, you can see that price is below the 100 exponential moving average, and even when price came and bounced from it, it kept going down, kept going down. So that is it. So now let's go back to the 100 chart. So to identify the trend, you have to use the 100 exponential moving average. If price is above, that means it's in an uptrend. So you can also identify the trend for those who are professionals. This is what we'll be teaching our students, and in depth into the market analysis. So if you're interested, you can apply for mentorship. And also, if also you're interested in our signals, because we give sniper entry signals that can flip your account to hundreds of dollars. Okay, just one signal can give you $100, even with a 0.2 loss size. So if for those with advanced knowledge, you can actually look at this market and say, okay, we are in an uptrend because we have a previous high, because this high breaks this particular this high here is higher than this one. We have a higher high, and now we have a low. We have a higher low, and now a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and that. So, but if even though you don't have the knowledge of that, just insert your 100 exponential moving average to define the trend for you. And so after that, after you have identified the trend, you have to go down now to the 4 hours. Is price above the 100 exponential moving average? If price is above the 100 exponential moving average, that means the trend is what? An uptrend. And you still have to step it down again. What is the price doing on the 1 hour? Is price above? If price is above, then that's we are still in an uptrend. You come down to the 30 minutes, still price is above the 100 exponential moving average. Same way in the 15 minutes. If price come and price bounces up from the 15 minutes, as you can see, price bounces up from the 15 minutes. That means we are still in an uptrend. So you can actually see now that we have identified the trend, okay, using the tape framework analysis. So now, now we identify the area of value. The area of value are actually support and resistance level. So now this is our support level, our resistance level, and then this right here, this area is our resistance level. So having identified the support and resistance level, okay, that's the area of value. And the next thing we are going to be looking at is the entry trigger. Okay, so but before that, let me just take you through this particular area now. Let's assume that this particular shandies here did not exist, like we are in the past, like a few days before now. Like this particular area starting from here did not exist. Then let's assume that it did not exist. Then let me delete that, and then let's assume it did not exist. So now the particular point of interest will be this high and then this low. You understand? That means we had a breakout, a retest, okay? But you don't have to, you still need to have that particular information or knowledge. And then we have that retest. You have the retest. You can actually see it. And then when it comes down to the 1 hour, you have the market ranging around that particular area, giving us what? An area of value within an area of value. So now we have a resistance level, we have a support level. So what we'll do now is wait for a breakout. Wherever the market breaks out to, okay, that's what we'll be following using other entry techniques. Okay, so now we have an area of value being established, and now we wait for price to break out. In this case, price broke to the upside. As you can see, price broke to the upside. So what you now do, you insert other indicators, which are the 16 exponential moving average, and see please the settings for this: period 100, shift 0, method exponential, apply to low, style is 3 pixel, color black. Okay, and then you go back this. Now the 16, same parameters but different color, apply to low and all of that. You just screenshot that. Okay, and then now you add the last moving average, which is the 10 moving average, apply to low, style, and then color red. Okay, when you're done, so now you can see here now that after the price broke out, let me just delete that. After price broke out and retested, then now if you go down to the 15 minutes time frame, within this particular structure, after price broke out, okay, after price broke out of this level, you can actually see now the price started riding or up. You understand? Price, the 100 exponential moving average came below, and then you can get your entries somewhere around there. I mean, you can get your entries. Sorry, can get your entries. You can get your entries somewhere here, okay, and your stop loss just below here, and then you target this previous highs. That's how you trade using the tape framework analysis. So the tape framework analysis. Then now that's for that particular area. It was an illustration I just wanted to give. So now and again, you're back again. Let's assume now that after that, normally you wait for the market to create, you wait for your areas of value, you actually wait, but the market reacts, then you actually use the information I'm giving to you now to define it. Now we have a resistance level. Okay, now the market came back to this particular area of value, and now we have support or resistance. Okay, in that this particular market, before the market was failing to close above there, and finally broke out, you understand, forming a resistance, and now it came back, went up, you understand, came back to it again. We have this 1, 2, 3, and then the 4th time now the market kept going up after bouncing from there. So but if you look critically here, in this particular area, you will see that there are the reversal candlestick pattern. That is our entry trigger. So now those are this reversal candlesticks pattern are what I call the entry trigger. You can see that one now. And if you go down to a smaller time frame, let's say the 1 hour, just look at that particular area in which I put that rectangle. If you go down to the 1 hour, what will you see? You are going to see further reversal patterns. Sorry, that was not what I wanted to take out. You're going to see further reversal patterns just as you see them now. You're going to see further reversal patterns. Now you wait for price to break above here. When you wait for price to break above, when the price finally breaks, now you use your moving averages to get your entry. The moving averages to get your entry, okay? So now you use your moving averages to get your entry. All right. So now I think I've gone too far. Yeah. Then that's because the previous level which I drew is no longer there to guide me. Okay, 15 minutes or the 5 minutes ahead. So looking at that particular area, let me use the 5 minutes time frame. Okay. Okay. Now using the 5 minute time frame, you can actually see that price have broken this particular area. And after breaking, okay, you can get your entry somewhere there, your stop loss like below the 100 exponential moving average after price have crossed, and then you target the highs, you target the previous highs, in this case, in this particular case, let me go back again. 15 minutes or the 5 minutes, 5 minutes, okay, 5 minutes. So after price broke out, you get your entries like somewhere here, okay, somewhere here, and then your stop loss a bit below the 100 exponential moving average, the stop loss a bit below it. So now I'm going to change this color to red, indicating a stop loss. So okay, and then now you target, let me use the 1 hour. Now see your entry, see your stop loss, see how tight the stop loss is, and now this is your take profit target. Let me change the color to okay, this is your take profit target. That's it, as you can see. So this is your entry. Let me use the 15 minutes time frame for better understanding. So this is your entry, your stop loss, your targets, okay, after price have crossed on the 5 minute time frame. The 5 minute time frame entry is not the same thing as the 15 minutes time frame. The 5 minute time frame is what I actually call the sniper entry, because it actually gives you the signal earlier before it can actually arrive in the 15 minutes. See, okay, now see where you got your sniper entry on the 5 minutes, and now look at the 15 minutes. So you can see the 15 minute signal. If you are to buy on the 15 minutes, this is where your entry will be. Okay, this is where your entry will be, and your stop loss just slightly below the 100 exponential moving average, still the same target. Okay, so that's how the strategy works. The day framework analysis, that's how the strategy works. The strategy is super duper cool. So now again, you wait for price to define your area of value by giving you rejection, and then when you practice this stuff, you'll be able to define these levels very well, and you'll be able to interpret them without actually wasting too much of your time. So looking at this particular area now, you can see now that in that particular area, price is going to respect it. Okay, looking at that candlestick pattern there, you can be able to go down to your 5 minute time frame or your 15 minutes time frame. Let's use the 5 minute time frame for instance. For your 5 minutes time frame, you can actually see now that after the breakout of this particular area, the area we're looking at, you can actually get your entry somewhere there, and your stop loss just below it, somewhere here. Your stop loss just below it here. That's your entry, and you target the previous high. Still the same principle. Okay, nothing changes. So how about this particular trade which I took here, which you're seeing there on the VIX 100? Yeah? So what happened is, I've identified that the market is in an uptrend, and what I should be looking for is buys. What I should be looking for should only be buy opportunity. This candlestick does not matter. It's actually price rejection, which gave us the retest. Okay, price rejected. It does not mean you should start selling. Okay, so price rejected. It was price rejected after breaking out, and then price came back to fall down. But you already identified the market to be in an uptrend, and if you identified your area of value, and we have a breakout of this particular area which was serving as resistance. We have resistance 1, resistance 2, resistance 3. On the third time, price broke out and closed above on the 1 hour time frame. So since price closed above on the 1 hour time frame, you will now go down to the 5 minutes or the 15 minutes time frame to get your entry. So coming down to the 5-minute time frame, you can actually see that price came and tested the 100 exponential moving average within this particular area. That's our area of value, because that's our area of value. You get your entries when the moving average starts sloping upward again, and then the 100 exponential moving average becomes separated from the rest of them. Then that's when you get your entries. Your sniper entry in, and then you just hold to get paid. Okay, so let's look at another example. Okay, let's look at another example. Let's say crash 500, for instance. Let's look at another example. Let's say crash 500, for instance. Now I'm just going to go ahead and delete the other indicators. So first of all, you identify the trend using the 100 exponential moving average. So you have identified the trend that the market is in a downtrend. So what will you be looking for? You should be looking for only sales. Okay, so now you should be looking for what? Only sales. All right, so now coming down to the 4 hours, you can see that price is below the 100 exponential moving average. And now let's assume that this particular area never existed before the time I was making this video, or as at the time I was making this video. Our area of value will now be this particular structure, this resistance, and this particular support. So what you now do, you will now wait for price to break out. Okay, on the 1 hour, you wait for price to break out. When price breaks out, okay, and it starts sloping downward, just like you use the smaller time frame, the 5 minutes, for your entry. And when price breaks out, what happens? You use the moving average, the 10 exponential moving average, same principle, and then the 16 exponential moving average, 16. You get your entry. Okay, so when you're done, you can see now that when price broke out, it was moving just following the moving average, the 10 and the 16 exponential moving average. But when price start touching the 100, you don't want to be in the market, because it's telling you price is about to reverse. Okay, so you don't want to be in the market. You just get your entry somewhere here, your stop loss above the 100 exponential moving average, and then you target. You can see the risk to reward. Okay, that's actually great. It's actually a great one. So that's that. Now looking at the 1 hour, you can see also that the market within this particular area have created an area of value, which is resistance. It has tested once. It created a structure there which was likely to be retested. You can see the candlestick information within there, and then the market came, retested that from place, and then dropped down backward, and then now it came back here again the third time, bouncing off from the 100 exponential moving average, which gives that place a high probability. You have two confluences here. One is resistance, and then 2, that candlestick rejection, and the third one, price is bouncing off the 100 exponential moving average. You can actually put your sales here, your stop loss above, and target the previous low. So that you can actually use this strategy for all pairs. Okay, boom and crash, VIX 50, jump, all of them. So now let me explain to you how I got this particular one. Let me explain to you how I got this particular one. So for that, this is VIX 50. So what happened was on the daily, we have price is in an uptrend. Okay, yeah, but price is in a range, because price has spent over how many months? Let's use the monthly. Price has spent a lot of months within this particular area. You can see the first month. You can see now the first month, 1, 2, 3 months, about 3 months within that area. So that means that price is what? In a range. Okay, now you come down to the daily. You have identified the area of value. First is to identify the area of value on the daily time frame. Now that's the resistance, and now below here is the support. Okay, here below here is the support. So at the support, at the resistance, you want to be selling, okay, and at the support you want to be buying. So now you look for confluences on the 4 hours. What happened? It's not that when I say sell at the resistance, it does not mean that when price gets here, you should start getting your orders. Price will respect it. No, price can push a bit above and then come back down. If price pushes above, it's normal. It's not like derivative is manipulating the market or any of those. But when you apply this tape framework analysis, okay, you're going to get better entries. All right. So now price pushed above, taking all the sellers out. And then when you begin to see this candlestick information, it tells you that okay, price is losing momentum and is about to what? To reverse and start what? Coming down back. So you now step down to your time frame. You look at what the market is doing within this particular area. Now price is actually forming a range on the 1 hour time frame. That is so many multiple candles there. And then now you step down again to the 15 minutes. Step down again to the 15 minutes. The 15 minutes now, when you step down again to the 15 minutes, you can actually see now, like that's still a range, okay? But you can use the 5 minutes for entry. You can use the 5 minutes for entry. You can use the 5 minutes for entry, okay? You can use the 5 minutes for entry. So now on the 5 minutes, previously, that's the range the market has created, like that time. And now when the market broke that range, you can get your entries here and your stop loss a bit above. Okay, your stop loss a bit above, right? So, and then now the market started the moving average started sloping down, following the 100 exponential moving average is above, and the rest of it is below, and price is just following, being guided by the 10 and the 16 exponential moving average respectively. So that's that. And now that would have been a sniper entry on the 5 minutes, okay? But actually I saw this late, but not too late though. I saw this on the 15 minutes after price have crossed, okay, the 100 exponential moving average was now above. I got my entry after the break of that resistance, and then price went back there, retested it, and that was when I got my entries down. Okay, so so now on the 1 hour, if you go to the 1 hour, now if you're on the 1 hour, this is the time you should be getting your entries in and your stop loss a bit above. So that's how the strategy works. It is actually working very well, perfectly well. I can actually take you to other pairs too, so that you get to see. So on VIX, let's say VIX 10 1 seconds, VIX 10 1 seconds, VIX 10 1 seconds. Yeah. So first of all, you identify what? The trend. Okay. First of all, you identify the trend. Price was previously in a what? Downtrend. Okay. Price was previously on a downtrend. Okay, as you can see, price was previously on the downtrend, and we now broke that downtrend structure, and now we are what? In an uptrend. Okay, so as you can see now, price came to an area of value, which is this resistance here. What might happen? Price might actually respect it, or price might continue to push up because we are in an uptrend within this period of time. So coming down to the 1 hour, you can see now that price is bouncing off from this particular structure. You can actually be looking for buys. Why? Because first rule is we are in an uptrend and price is bouncing off from the 100 exponential moving average, which is actually good for you to get your buys in. Okay, price is bouncing off from the 100 exponential moving average, and on the 4 hours too, price is bouncing off from this particular structure. Okay, breakout support down resistance, So